Welcome to the Circular Integrity Show. I'm Pete Paisley, and today we're talking about something that's a big change for the entire ITAD industry, whether you're ready for it or not. ESG reporting, climate disclosure, carbon accounting. Yeah, I know, your eyes just glazed over. But here's the thing. This is about to become either your biggest competitive advantage or the reason you lose deals to competitors who figured it out first. So join us as we welcome Sebastian Foot, co-founder of Bloom ESG. They're helping ITADs turn everyday asset processing into quantifiable environmental impact data that Fortune 500 companies are literally required to report by law. And spoiler alert, these laws are already in effect. So first, let's cover some industry news items after we hear from one of our sponsors.
Reuse, reimagine. That stuff below your cut line? Meet your best partner for more cash. Keep your piece of the upside with revenue share and fast 30-day settlements. Branded reporting for partners. More options with our innovative on-site technologies. DataBot for your in-house data destruction. DataBot Go mobile version for secure on-site processing. And our DataBox service for secure, tracked, and serialized returns. Imagine your upside with early upgrade. Reuse. Reimagined.
Your host, Pete Paisley. Pete is a consultant and VP at Circular Integrity, a leading consultancy to IT asset disposition and IT resellers who want to implement strategic growth opportunities to outpace the market. Pete has been in the IT industry since 1989, working for some of the biggest PC distributors and resellers, in addition to premier IT service providers like Park Place Technologies. His consulting experience includes data storage, electronics repair, and industry trade groups. As a lover of tech and the tech afterlife, Pete is thrilled to bring over 30 years of tech industry sales experience to the Circular Integrity Show.
Let's run through some current news items of note in the ITAD industry. We welcome Leah Pollan from Circular Integrity as she joins with her perspective. Welcome.
Hi, Pete. Thanks for having me.
Yeah, good to have you. So the first item is Tailwind Capital launches IT asset disposition platform. This is news from September. Tailwind basically acquired DMD Systems Recovery, a IT asset disposition services provider based in Arizona. They received a majority equity investment from them back then. What do you think, Leah?
So my understanding is Tailwind's first investment in the ITAD industry, and they're expected to continue such acquisitions in this segment. These PE firms are looking to generate economies of scale in the industry, and they want to combine several complementary circular businesses.
Yeah, it makes sense. They want to benefit from economies of scale by combining the back office and other SG&A type functions across multiple entities in the platform and the integration and automation investments that they make.
Sure, because all the trends are pointing to ITADs implementing and investing in more robust system capabilities across finance, operations, and sales.
Yeah. We have some hardware refresh updates. Recently, David Daoud at Compliance Standards participated in a podcast for ASCDI and highlighted the ongoing strength in hardware refresh cycles. And this echoes what we're hearing from other industry sources. On this note, Compliance Standards just released their analysis called the Windows 10 Sunset, and estimates between late 2026 and 2028, roughly 320 to 350 million laptops and desktops, equal to about 600,000 to 700,000 metric tons of material, will reach the end of their usable life. but they estimate that only about 15 to 25% will convert to net profit after processing for a variety of reasons. What do you think, Leah?
I believe some of these issues processing many laptops for recovery in a profitable fashion are due to repairability issues. The economics becomes difficult, and it's because of the design issues that can make battery replacement very time consuming. And that's just the batteries.
Yeah. I was interested in this, so I checked some generic market values for a 2020 business laptop that originally cost $1,500 with an i5 processor, 16 gig of RAM, 500 gig SSD, and market value was about $200 on resale. So if you're an ITAD, and even if you're paying a 50-50 revenue share, which would be generous to the ITAD, it's hard to put a lot of labor into a $200 device with $100 in margin to play with. Now I'm starting to understand why he estimates only 15 to 25% might be marketable.
Yeah, so if the labor content is high, and because of the extra work to replace the battery, they get stuck. Maybe the Chrome OS Flex option could be a factor here, as the other issue is paying for a new OS license is a potential deal breaker. But maybe there's some market opportunity for a second life as a Chromebook.
Yeah, I find that interesting, and we'll have to continue to talk about that as we follow these hardware refresh issues in the future. Next, we turn to the Siri ESG reporting standard update and digital product passport news. First of all, Siri announced their intention to publish a standard for ESG reporting back in November 2023, and it established a technical action committee to develop the standard. And since it's relevant to our topic today, we thought we'd look for updates on timing on this. I spoke to Mike Easterbrook at Siri last week. He shared that the Technical Action Committee is reviewing the latest revision, and they are about ready to go for public comment by the end of this year, or worst case, very early in Q1. So I see that as really good news, and hopefully the public comment period can move forward pretty quickly. We're also tracking news for the Digital Product Passports initiative out of Europe, or DPPs, where they're emerging as a requirement first in Europe and probably soon after here in the U.S. We swapped some emails with Kristen Berry at Apcudo, and they're developing a device passport based on the EU Digital Product Passport with the goal of delivering a persistent, verifiable record of each device's history and performance created through the Apcudo platform used by many cell phone processors. So, Leah, you're actually the one who talked to Kristen. Any further comments on this?
Yeah, it's still early days for DPP overall, but in the EU, it seems that batteries are the first product segment of focus. While Apcudo is taking the approach to their core markets by trying to build a DPP-style ecosystem around mobility products as a stronger value proposition.
Yeah, Carfax for cell phones, essentially, right, is how I've heard it referred to, and that's probably a good business move for them. We'll continue to keep an eye on both these developing areas in our news segments. And of course, again, it's relevant today, as our guest on today's session is Bloom ESG, talking about ESG tracking software for ITADs. Leah, thanks so much for joining us on the news segment. We'll see you next time.
Thanks for having me.
Here's what we often hear. We don't need ISO or other certifications right now, or our clients aren't asking for it. Just because it's not needed today doesn't mean it won't be required tomorrow. Certifications usually take 7 to 16 weeks to complete. That's 2 to 4 months. If a client suddenly requires it, waiting isn't an option. These certifications help you qualify faster for global and OEM contracts. Keeps your operations audit-ready all year. Cuts internal waste and rework. Builds trust with buyers before price is even discussed. For example, a U.S. plastics and machinery manufacturer invested $8,000 in ISO 9001 plus ISO 14001. The next quarter, they qualified for 2 OEM contracts worth $240,000. Another firm in the same space skipped certification and couldn't even bid. ISO isn't an expense, it's proof you're ready when opportunity knocks. Don't wait for a client to demand it be the one already certified. Book your free consultation today with MG Environmental Consulting.
Our guest on the Circular Integrity Show is Sebastian Foot, co-founder and talking head for Bloom ESG. You can call him Seb. Bloom ESG is the global leader in avoided emissions and carbon inset certificates for the e-waste and IT asset disposition sector. Bloom empowers recyclers, refurbishers, and enterprises to quantify, certify, and monetize their positive climate impact, driving the circular economy forward. With recent state legislation in California and the CSRD in the EU, the takeaway is clear. ITAD ads will want to provide solutions for customers to support ESG reporting for retired IT assets as soon as possible. The California legislation will drive all major companies to rely on partners who can provide this service. We are already hearing of Fortune 500 companies dropping end-of-life service providers because they can't provide this data. So help us welcome Seb as we explore this timely topic.
Sebastian, welcome to the Circular Integrity Show.
Thank you for having me, Peter. Pleasure.
I want to jump in by asking about your origin story. Tell us a little bit about your background and how you started Bloom ESG.
Yeah, thank you. It's an interesting one. I cut my teeth in sustainability starting just over 20 years ago. And I was fortunate to join the sector when carbon trading, in Europe at least, had just become a thing and was becoming regulated. So I really got to see consulting from the perspective of advising governments on how to think about carbon reductions. I got to help companies think strategically about what carbon trading meant for their business. And then finally, I got to work in finance, where I got to learn how to actually trade environmental certificates and kind of what that meant from a financing and balance sheet perspective. Fast forward to Bloom, I launched the business with my co-founder Amanda Bond about 4 years ago now, just over. And we really wanted to kind of bring all the skill sets that we kind of had from our corporate sustainability time to companies that hadn't really kind of used this sort of toolkit before. And really quickly, that took us into the circular economy, and in particular, a company called Dynamic, which I'm sure you know, who really wanted to understand, what do avoided emissions mean in a way that's meaningful for their customers. So that really was the launch of Bloom, and it was a strike of good luck. We were fortunate to kind of move into this sector at a time when sustainability was just becoming thematically important, I think, to the sector too.
I see. And yes, many of us watched what Dynamic did with ESG reporting with much admiration. And I was interested to learn sometime later that you were responsible for that. Where's your company based?
So we are based in the UK, headquartered. Our advisory team is based in Amsterdam and Toronto. And then we have our software capability in Lisbon, Portugal.
Interesting. So before we dive into the deep end, let me just set the stage for our listeners. California just passed some pretty massive climate legislation that's going to affect basically every major company doing business in the state. And since California's economy is bigger than most countries, it's kind of a big deal. Seb, break it down for us. What just happened?
Yeah, honestly, I think actually two things have happened, really. You've got Bill 261, which doesn't sound like a very exciting title, but in reality, it's climate-related financial risks. And you've got Bill 253, the Climate Data Accountability Act, neither of which sound particularly exciting. But frankly, all of them have material implications for businesses, not just in California, but those businesses doing business in California. Bill 253, climate data accountability. In reality, most companies are already reporting on Scope 1 and Scope 2 emissions. Frankly, it doesn't really kick off till 2027. So I think the majority of companies are probably already complying with that even before they've kind of had to be told by their Big Four accountants they need to submit this data. So I think that's probably okay. But the really important one for, I think, most companies is the Climate-Related Financial Risk Act. And that actually begins January 1st, 2026. So you can kind of count the days now.
Wow.
Why does it matter? Well, first of all, who does it affect? Sorry?
I said, wow, January 2026. It's like now.
You can set your alarm for that one, basically. Any company that has more than 500 million in revenue linked to California business activities is going to be touched by this. That isn't just companies in California, that's companies that do business there too. And climate-related financial risks, I know it's a bit of a mouthful, but when it really breaks down, it really comes down to how are you accounting for physical risks as a business, and that's just not like where you operate, that's across your value chain. And then how are you accounting for other non-physical risks, such as disruption or financial risk or insurance risk that may occur as a result of your business activities? So it's pretty wide in scope. And, being wide in scope can be helpful, but also it can be a bit of a challenge as well when you have to kind of really figure out each one of the material risks related to your business. So this is a big deal, I think, for a lot of companies.
Yeah, so this impacts any company doing business in California, whether they're based in Ohio or New Jersey or New York or even in Europe, right? So basically, these companies, if they meet that size threshold, they're scrambling right now.
I think that they probably are. And I think there are probably many that haven't even quite realized that this is something that will impact them. The funny thing about regulation is you assume that once it gets published, the companies actually know about it. But the reality is, unless their advisors or their accountants are actually kind of on top of these things, they may not know. The top 500 will know, but the long tail, this could be coming as quite a surprise. And that means doing a process and getting it right really fast. That's not easy. So I think there's a lot of companies that should be paying attention and starting to do things right now.
Yeah. So, Seb, I've been hearing comparisons to Europe's CSRD regulations. Are these basically the same thing, or is California doing something different?
It's a great question, and I can definitely understand the comparison with CSRD, but I think really this is their own version, and it's more narrow in focus. CSRD is even broader in scope, whereas financial related risks and disclosure, there's actually quite a lot of track record coming from frameworks like the TCFD, which I think will make it more palatable for companies to kind of understand how to report. And actually, there are many companies that already report under TCFD already. So I think they will have some grounding in the sorts of things they're expected to do.
And Seb, as I understand it, some other states are working on similar legislation to California's, correct?
Yeah, New York, New Jersey, Washington, Colorado, Illinois. This is happening state by state instead of at the federal level, which is kind of what we've experienced in Europe. But in reality, this is going to cover a lot of companies that are operating outside of those states.
So, Seb, this is the new normal.
This isn't just about California anymore, talking about the sorts of things that they value. This is much bigger.
All right, Seb, let's bring this home to the ITAD world. I've got listeners who are running ITAD operations and IT resellers and refurbishers, folks who are thinking, okay, more regulations, great. How does this affect?
Look, so here's the thing. Your customers, especially the Fortune 500 and maybe the Fortune 1000 companies, they need this data. And with these evolving regulations, legally, they're going to need to report this data as well. It's not really a want to have, it's a need to have. And I think ITADs are literally sitting on a gold mine of environmental impact data related to every single asset that they're processing on behalf of these customers.
Yeah, great point. So walk me through like a real world example.
Yeah, sure. So let's say you receive 10,000 iPads from a major client. Now, obviously, as an ITAD, your goal is to ensure that the majority of those could be reused, and then the minimum will be harvested for parts and scrapped. In reality, what your client wants to understand is, well, what did you do? How did you do it? And then what is the impact? And so what Bloom does is it takes that data and generates a comprehensive report showing exactly the avoided emissions generated through the individual assets that were processed at that facility in that location, down to the raw materials that were covered and reused. And obviously the scope 3 avoided emissions that were generated as well.
I see. So you're basically turning, we recycled your stuff responsibly into, we saved X tons of CO2, recovered I pounds of rare earth minerals, and kept Z pounds of toxic waste out of landfills. Very specific and actionable data, it sounds like.
Exactly. And that data feeds directly into voluntary and mandatory ESG reporting frameworks. So you're not just providing a service, you're supporting corporates to meet their targets and providing compliance documentation that they're legally required to share and disclose anyway.
Yeah, that's huge, because right now most ITADs are just handing over a certificate of destruction or data wipe cert and calling it a day.
Yeah, that's fine for security compliance, but it has nothing to do with climate disclosure requirements or net zero targets that a corporate might have.
Yeah, and I want to point out that I think another key aspect of your service is alignment to the ISO standard, ISO 14064.
Yeah, we know from experience that having the right data is really linked to having the right methodology. And so when we built the methodology for reporting avoided emissions, we wanted it to align with an internationally recognized standard. And so we lent on ISO 14064 as a way of demonstrating compliance to the best possible data reporting you could offer.
Seb, I'd like to take a minute to walk through your demo with you.
Let me just start by showing the global window that an ITAD can access. So what you can see here is the ability to choose different clients across your portfolio and select the individual orders that you've processed for them over any given time period. But we can go and do more than that. We can go from orders down to the individual assets that have been processed. This is the ability to kind of see every sort of asset processed, and Bloom tracks thousands of different assets based on what is being received. And we can break that down into the individual weights of materials that are coming through, the percentages, and then the avoided emissions related to every sort of asset and every sort of commodity. From that global dashboard, you can then look at individual customers that you're serving. Now, this could be because you want to generate a specific report because they need that for a specific compliance period, or because it relates to a specific set of assets that they need to understand, such as like data center hardware. And you can share that report based on any amount of time that you've been engaging with them for. Typically what we see is that a client will look for like a quarterly report and then an annual report. And this is sort of data that they're going to use for compliance. This is sort of the sort of data they're going to actually put into their ESG reports. Now we go into commodities. So we have the ability with our database to actually understand exactly what sorts of commodities and materials actually sit across all different sorts of assets, like an iPad or a smartphone. And here you can actually search for those assets and see the individual breakdowns by avoided CO2 and by other materials. As well, you can also see the sort of recovery process that took place too. So some assets will be shredded, others will be smelted, and we can track all of that within one database. And then finally, this is the sort of report that you'll see when you actually share it with your customers.
So Seb, at its essence, you all have developed the most comprehensive catalog of ESG-related data to compute devices typically handled by an ITAD, right? End user compute. You have good coverage on data center products, Seb? Servers?
Absolutely. We track thousands of different types of hardware and hundreds of thousands of different sorts of breakdowns of those hardwares as well.
And what happens if there's items that are exceptions? They're not in your database?
Yeah, we have that. And we had that recently, actually. We had an ITAD say that they now take drones. And so we have to then figure out, well, what actually sits inside a drone. Typically, that thankfully is just plastics and motors. But we have a dedicated team, and that is their job. They're very good at finding emissions factors related to very niche products.
Seb, let's talk about Scope 3 emissions, because that's where IT assets seem to really come into play. I've seen 3 methods mentioned in the guidance: spend-based, activity-based, and supplier-specific. Which one actually matters for ITADs?
Yeah, really good question. So spend-based is the easiest starting point for most organizations. Basically, you're estimating emissions based on the dollars being actually spent. It's the least accurate, but it's the easiest to implement fast. Activity-based data is much better. You're actually looking at what actually happens to the assets that you are processing. But the industry overall is moving towards supplier-specific emissions grade data. So think of like the Scope 1 and 2 data that your suppliers are actually consuming related to the products and services they're actually offering you.
But supplier-specific data, it requires actual data from the suppliers, right? So isn't that where the problem is? I've looked into this. I don't see Dell or HP publishing emissions data for every specific SKU that they make.
Well, exactly. But most of the guidance says, get your reports from the OEMs. And, good luck with that. There aren't really standardized tools that are out there, despite the fact that large companies will be asking their biggest suppliers for this grade of data. There are some third-party data sources out there, but nothing so far has been aligned with ISO best practice standards. And that's what really matters for regulatory compliance.
And Bloom fills that gap, right?
We do. We are ISO verified, and we provide supplier-specific data that actually holds up to regulatory scrutiny and audit. And that's kind of what we built it for. This is critical for companies trying to meet their own TCFD obligations or reporting obligations in California or under IFRS.
I see. So for folks who aren't fluent in this acronym soup, what's TCFD?
Yeah, and you're right, and I'm sorry. This sector especially does like a good acronym. So look, TCFD is, put simply, the task force on climate-related financial disclosures. And it's so long, that's why we tend to use TCFD. Basically, it's a framework for disclosing climate-related risks and opportunities. The corporate world likes it, I think mostly because the financial world really likes it. It's a climate lens on financial risk.
I see. So it's not just how much carbon did we emit, it's what are the financial risks and opportunities related to climate change for our business.
Exactly.
All right, Seb, let's get tactical. I've got ITADs and resellers listening who want to know, how do I actually sell this to my customers? What's the pitch?
See three primary selling attributes. First, Fortune 500 companies, they already require this existing sustainability reporting. They're doing it anyway. And you're already making their lives easier with the services you provide. Why not take that next step and make their lives easier from a sustainability data perspective? Second, I think Fortune 1000 companies are going to require this as they begin to grapple with the Californian disclosure requirements. We're already seeing demand for this sort of data from companies under CSRD, especially as they think about their downstream waste strategy and data disclosure requirements. And then, frankly, we're just seeing it roll out in other states. So it might feel like an option, but I just don't think it's an option anymore. I think good ITAD should be doing this anyway. Third, even companies that don't necessarily have a legal obligation to do this, our experience is they want this data. We see it from a net zero target perspective, but we also see it during the procurement process. They're expecting better sustainability awareness from their partners and suppliers. And this is a way to stand out and be recognized for your contribution.
Yeah, I see that RFP angle as a pretty big one. Every major procurement process now has sustainability questions. And if you can't answer them or deliver, you're out.
Yeah, absolutely. If you can say, we're going to provide you with quarterly ESG impact reports that are ISO certified and verifiable, then you're going to differentiate yourself immediately from competitors who are just offering a basic recycling service.
So I'm also thinking, who does an ITAD call on at these Fortune 500 accounts to discuss this new reporting?
Yeah, due to the nature we share this sort of data with, we tend to find that it's often the head of IT. Ideally, it's the head of sustainability. And actually, during the RFP process you just mentioned, that tends to be when the head of sustainability is involved and tends to weigh in heavily on which companies should pass muster for an RFP. But then increasingly, it involves other players in the process too.
Yeah, and in some of my research recently, Seb, I believe the CISO, the Chief Information Security Officer, is increasingly involved. As I understand, many firms have aligned cyber initiatives with their ESG goals. And the Chief Information Security Officer, he's already thinking about things that ITADs do, like data security and IT device security. So this is a relationship I think an ITAD should be developing.
I think it's incredibly important. And I think that you're right. That's the ideal approach that an ITAD should be taking.
So how do ITADs actually implement this from a systems perspective? Do they need to hire a sustainability team?
Not at all. And I realize that, some of the bigger players already have that, but I realize that most companies, they don't have the ability to invest in that sort of capability, not necessarily what they need. But, from our perspective, we provide an API that directly integrates with existing ERP systems. Our goal is to get companies onboarded and basically reporting to their customers procurement level data within 4 weeks. So basically what you're already tracking can come through the process, be generating impact reports fast, and then you can begin to provide quarterly reports for the next cycle.
And pricing-wise, how are ITADs expected to package this?
I think it varies, to be honest with you. I mean, some are already putting this into their service fees. Some are adding it as a premium feature. And I think especially with the rise of California disclosure requirements, I can see this being a premium add-on. I think the key is positioning it as compliance insurance. The cost of not having this data far outweighs the absolute benefits that companies get from doing this as well.
Yeah, right. We're recommending to clients that they can package this data as a service in ways to help them recover additional fees, particularly before a lot of competitors are able to deliver it. They should be able to charge that premium.
Yeah.
I want to talk about something really interesting you mentioned in our prep. Carbon insets. Now, I had been thinking of these as carbon offsets. I thought that's what a company traded to offset their carbon emissions, but I've since learned now from you that ITAD ESG is typically dealing with carbon insets, which are for carbon reductions versus emissions. So now it's obvious to me, and I understand the offsets versus insets definition. So an ITAD can enable clients to offer carbon insets to use within their supply chain, you told me. This sounds like it could be a pretty big deal for the industry.
Yeah, I think so. It could be. The way we think about carbon insets is that they are a new type of environmental attribute certificate that's based, in this case, on ISO 14064. But unlike carbon offsets, where you're buying a credit that comes from an unrelated project, such as tree planting in Brazil or a renewable energy project in India, insets are generated from decarbonization activities that actually are within your own value chain.
So the emissions avoided from reusing those 10,000 iPads could become tradable certificates?
Exactly. I'll be honest, this is still early days, but the vision is that ultimately ITADs could provide these certificates to customers who ultimately could then trade them upstream or downstream with their supply chain partners. The way I tend to think about it right now, just because it keeps coming up in conversation, is imagine a data center operated by digital reality, sharing carbon insets with major customers related to asset longevity or refurbishment for those data center operators could be a real important strategic sustainability partnership.
Yeah, that's really interesting because you're not just providing a service and you're potentially creating a new revenue stream for your clients and a new way for customers to manage their carbon footprint within their own ecosystem.
Exactly. And not only is it verifiable, but it's directly tied to the actual business operations compared to a carbon offset where it's quite hard to kind of isolate this specific avoidance or reduction that's actually taken place. It's interesting because, right now carbon markets are evolving and the interest and demand for carbon insets is early, but it's gaining traction fast.
Well, I love it. It's kind of like loyalty points, but for carbon.
Yeah, I think that's a really good way to put it. It's genuinely exciting.
Before we wrap, I want to touch on something you mentioned, social KPIs. We've been talking about the E and ESG, but what about the S?
I think it's a really interesting point. E within ESG tends to get all the attention. And honestly, I think being able to wrap everything up into a ton of CO2, I think makes it relatively straightforward from a reporting perspective. But, reality is, I think S has been undervalued. So that's something we've been asked to think about with some of our partners. And yeah, it's coming. We're already beginning to develop social impact metrics. Think job creation, better labor practices, maybe community impact. Some people are calling it a social credit within supply chains. This is something that we're really keen to explore with partners right now.
That sounds really interesting. Could be a bit dystopian, but there seems a lot of potential there.
Yeah, it does. I mean, the reality is, stakeholders, investors, customers, employees, they really do care about the social impact that is felt more broadly through through their business operations. So it has been carbon for a long time. I don't think it's just carbon anymore. And I think this is an opportunity to better provide a more complete picture in, again, a way that is verifiable.
So ITAD should be thinking about this now.
I think some are, actually. And for the majority that aren't, I think it'd be great just to be aware, look, this is coming. This is something that companies can get ahead of. And a bit like better reporting and carbon inset certificates, these are all areas where you can really build a competitive advantage. So we think it's the next step in the journey for those companies that are early adopters and recognize that the sustainability data is just the key to winning bigger contracts with better clients.
All right, let's bring this home. If you're an ITAD or IT reseller listening to this right now, what's your one action for tomorrow morning?
Super simple. Just schedule a call with me, the team. We will take you through the carbon calculator that we were showing earlier. You can share some example data from your own systems. You can plug that in and show you what an impact report related to a particular customer might actually look like. Doesn't take long, takes a few minutes, and we really like to show tangible examples of how we work with our clients.
I see. And if they want to talk about time frame and effort around actually implementing this?
Yeah, happy to walk through that. Every ITAD is unique, has different business models, or implements a different ERP system. It could be a single facility just using Macor or Razor, in which case we can generally be up and running in about 4 weeks. But we also work with companies that have built their own ERP systems. Sometimes that can take a little bit longer. Generally, we're talking weeks to be up and running rather than months.
Nice. And this is a perfect time to mention that ITADs can also reach out to myself at Circular Integrity to discuss our go-to-market services for ESG. We have a sales playbook to share that explains how we help you offer ESG services that increase your value proposition to better win new customers.
Yes, and I think it's also a good time to say we have a special offer for Circular Integrity show listeners as well. For companies that are interested to sign up before the end of November, we are offering free onboarding for those customers, irrelevant of what ERP system they are using. And we're adding in an extra 6 months free extra license fee on top of the normal 12. You're getting 18 months for the price of 12.
Yeah, that represents a significant discount, Seb. Thanks for the offer. And what a time for an ITAD to get going as this explodes onto the scene in the coming months. So thanks so much for breaking down what could be a really dry topic into something that's actually actionable for our listeners.
No, thank you for having me, Pete. Really appreciate it. And remember, compliance is coming, whether you're ready for it or not. So, let's make the most commercial value that we can out of it, that we can.
I agree. Hey, we're going to take a minute for our talkback session of the show. Are you ready to answer some viewer questions?
Let's go.
Time for Audience Talkback. Questions from industry leaders you want to hear.
Good afternoon, Pete. Dave Cummings, Managing Partner, Agile Equity. Really excited about the Circular Integrity podcast and all the good content that you'll have on it. One question that I had was how many ITADs have actually implemented Bloom software?
We launched this solution formally about 12 months ago. So I'd love to tell you that it's hundreds. It's not hundreds yet. It's more in the teens than the hundreds at this point.
Hey Pete, great show. I have a question though. If a company already uses an e-store calculator and EPA data for ESG reporting, how would Bloom improve upon that?
That is a good question, and one that we get quite a lot. The reality is both e-stewards and EPA are offering generic values that are linked to just a handful of different commodities. And those values are not specific to the facility that is processing them or the way that those assets are actually being processed. At best, it gives you an indicative value, but in reality, it's not the sort of data that companies can actually rely on to make decisions for, use to differentiate themselves in an RFP or meet the kind of requirements that we're going to expect to see in California. So the way to think about what Bloom does as an alternative is it provides audit level data down to the individual assets being processed and reflects how they're being processed to ISO 14064 requirements.
How does Bloom reporting integrate with my ERP or in-house solution?
Well, we have an API, which is incredibly easy to connect to. And we've more recently announced a partnership with Maker. So we are integrated with them, and that speeds up the integration process. But if you have your own ERP system or you're using another third party, we tend to find it takes weeks rather than months to complete an integration process.
Fantastic. So it's pretty straightforward, even with companies running their own in-house ERP system or what have you.
Exactly.
Seb, what does this cost and how do you charge for onboarding and ongoing service fees?
Yeah, it's interesting. We've tried to keep the pricing model as simple as possible. We just charge an annual license fee. For companies that are using ERP systems that we've already integrated with, we can avoid onboarding costs. And the annual fee is charged based on the number of facilities that you're operating. So it's kept super simple and made to be affordable as well.
All right, we have another question from who the caller is. It's something to do, it's for you specifically, Seb, something to do with chimney maintenance.
I was working around your house a few years ago, and you wanted to put a chimney pot back up on the roof. You went on the roof up the ladder, because I'm not very good at ladders, and I had to push right up to the top. And I was pushing, and it was really hard, and I thought, I can't push anymore. And a sound came from down the chimney. You can do it, Dad. You can do it, Dad. Well, I knew that I couldn't. But anyway, I did it, and hooray, hooray. And then you came down, Dad, I think I should pay you membership to go to the gym. Clearly, and I didn't want to go to the gym because there's all these things you can do.
Your dad sounds like a funny guy. I don't know how he got the number to call in.
Well, he has a penchant for trying to embarrass his son wherever he possibly can. So I think that's how he figured that out.
We see a big opportunity for ITADs that are first movers in ESG reporting who also build an identity for their company around it. While ESG reporting and related services will probably become more common in a few years, those who embrace it now and tell the story well will succeed in acquiring more new brands than those who don't. So why wait until customers start requiring it? This is an opportunity to demonstrate leadership for your company without significant upfront investment. Here's some suggested takeaway action items to consider after today's session. Investigate the Bloom Environmental Benefits Calculator by booking some time with our guest today, Sebastian Foot. Work with your leadership team to build a go-to-market strategy for ESG services. And consider circular integrity as a helpful partner. We have a set of deliverables we can bring to the table to assist your company in bringing ESG services to market. As part of your approach, also consider some of the following. Review your current customer base for Fortune 500 or Fortune 1000 companies to see if they're on the California list of impacted entities. See what industry segments are most impacted by these new regulations and identify any of these that are based in your primary locations. Then define your outreach strategy for these new prospects that you've identified. Are you comfortable calling on the Chief Information Security Officer or Chief Sustainability Officer? That's a new place. If you are comfortable calling and you're ready, what's your value proposition to these actors? You got to build a story. So build a story around ESG and greenhouse gas reporting and make it the primary conversation you present to prospects on your website, your customer meetings, and other outbound communications. You should probably update your RFP response templates and other documentation to include ESG reporting capabilities and start all your conversations with customers and prospects about this topic. I would watch the pending legislation in the states like New York, New Jersey, Washington, Illinois. They're all working on similar climate disclosure requirements like California. And I'd also keep an eye on the federal level, as there's some related action going on there. All right, that's it for this month. Next month, we've got another great episode lined up, so make sure you're subscribed wherever you get your podcasts. Until then, keep up the good work, keep the circular economy moving, and remember, sustainability isn't just good for the planet, it's good for business.